Hello and welcome back to today's episode of Crypto. Oh my God, we've got a lot of exciting momentum building. We're seeing new and interesting capital flows into our markets as they sort of convene together with the traditional fiat currency rails. I mean, there is a movement happening that I find to be very interesting. Let me help you piece together the dots. Let's dive in. Coming out of the gate, I want to reference this post by Matthew Sigel of Van Eck. He is an amazing resource for anybody that's looking at that traditional finance cryptocurrency crossover. Not only does he have a lot of skin in the game as a leader in the space, launching many of these ETFs, but he's very knowledgeable about the appetite around Wall Street. And he posts, quote, "Bitcoin is like a nuclear reactor that has been installed in our balance sheet." This is from Milias of Cash 3BZ, market cap of $160 million, a Brazilian company that is the first to put together a Bitcoin treasury on their balance sheet. Now, the reason I bring this to the forefront is just the sheer momentum we're seeing these balance sheet acquisitions. What I want to note is the evolution that I have seen personally of capital coming into the cryptocurrency space, right? If we want these assets to have real value, to accrue real value, that money needs to flow from somewhere. In the very beginning, it was all retail, right? When there was just Bitcoin, when there was just Ethereum, I mean, you had to directly purchase these assets from miners. So we just see this tiny little cabal of nerds, right? This little clique of internet people that did meetups, that got together and that traded these assets. That expanded around 2013 when Coinbase launched, which allowed you to purchase Ethereum without having to mine it yourself. If you keep in mind, Ethereum back then was proof of work. This was way pre-merge. So it was, miners to Coinbase, which was retail buyers. It suddenly made it easy. Then it moved on through scaling to venture capital. They went out into the world to find sources of capital so that they could bring that into the ecosystem via early stage developments. And of course, this all came to a head with the current status of overinflated valuations of these projects being too pricey. And that's sort of why we initially saw retail not only be able to access the assets, but the early rounds of these companies. Now we are pivoting from VCs being the primary source of exogenous capital or capital that sits outside of our ecosystem to these new reserves, whether they be companies that are putting Bitcoin on their balance sheet as a store of value asset, which is picking up tremendous steam, or this new model of these private reserves that acquire a ton of assets, whatever their thesis might be, and they try to reverse merge into a publicly listed company. So that means that we are going to see more publicly traded reserves. This is a way for further capital to enter our space. And let's keep in mind, not only are we sort of moving and pushing these assets into the traditional markets, but we're also slowly cracking that wall of the traditional markets themselves, saying, hey, maybe you guys should be trading on chain. So all of this is happening in tandem, and this is an evolution of that core substance that allows us to grow, which is capital and liquidity. So this is just indicative of a broader evolution that trends very positively for us and should instill a lot of excitement. We can see some of this beginning to pick up steam. Just Coin Bureau pointing out public companies keep on buying. NASDAQ listed DigiAsia implements a Bitcoin treasury strategy aiming to raise up to $100 million in BTC purchases. This is nuts. I didn't expect this kind of onslaught of corporate buying. And this is all really before the states get their treasury reserves up and running, before any nations get their treasury reserves up and running. All of this harkens back to El Salvador and their Bitcoin balance sheet, which the higher this goes up, I mean, this is just national proof that a smaller country can break themselves away somewhat from the global monetary order, that they can create a store of value. I mean, you've got little tiny Bhutan out there with a hydroelectric dam mining capital. The majority of their GDP, or they actually measure gross domestic happiness, which is a cool side story. The majority of their GDP is now in self-mined Bitcoin. So we can see that just as this revs up, it's actually a self-perpetuating cycle. This is all very positive for the Bitcoin price, which is in turn rather positive for the industry writ large. Now, as I move over to Glassnode, who is a data provider, really getting very insightful information on that core fundamental level of just pure data, they say accumulation is now visible across the entire wallet spectrum. Even less than one BTC holder is basically saying the small wallets, the medium wallets, the large wallets, everybody is in an accumulation phase. That mentality from sell is going out the window. People are in buy and they are in hodl. If you remember that, we hold on for dear life, but really the long-term thesis that you buy and hold these assets, something that really disappeared a lot in the meme coin world and actually gave me a lot of pause, right? Did we move from buy and hold really long-term assets that we believe in to this just constantly turning over casino of shitcoins that we enter and we exit as soon as possible? So this is all very positive, and I like to look at the order books. If you want some information as to what we're really seeing, go to the order books. This is Hyperliquid. I've spoken about it a lot. I love it. It's a decentralized exchange. Decentralized exchanges have a fraction of the order flow of the centralized exchanges. But look at this, 15 Bitcoin buy, 3 Bitcoin, 6 Bitcoin. We're seeing huge chunky orders all morning on the sell side. I've had this open for a while in full candor, has been these massive orders resisting the price move above 105,000. I saw 20K, 11, here we go, 7, and it's just being eaten up, just consumed, right? And look at the numbers on the buy side. So we can see the order books are the future. They show us what people are intending to do, right? Their intents are printed here in these order books. And of course, we keep seeing people try to defend this ascent past 105,000. We're, on the upper side of that spectrum. But man, that buy side, 105.6, we just saw like a nearly 20 Bitcoin buy order. So there is real demand coming up. If you want to open up Binance, doesn't really matter where you are, just to look at their order books, you will see this on an order of magnitude larger. 26 Bitcoin order purchase right here at 105,000, just under $600. So we can see the momentum really beginning to pick up steam. Again, we're having these corporate balance sheets. They can move a little faster, right? If they're a private company or if they're a public company, they can get approval. We are beginning to see the first state reserves go live. We haven't seen a national reserve, and all of this is just going to be a race to who can grab the Bitcoins. So this is pretty fascinating. If you have a Bitcoin in your possession, you might want to look at it the same way I look at it, which is this is inheritance kind of assets. You don't really want to get mired into the flip. That is not how you're going to win in this game. Now, one thing that I did find kind of funny, I saw this post come up from Watcher Guru, just talking about how Ripple CEO Brad Garlinghouse says that pro-Bitcoin Senator Cynthia Lummis canceled his meeting and won't reschedule. Now, what's going on here is that Brad has been an amazing CEO for Ripple. Ripple mints XRP directly from their centralized reserves. They can just basically make it up. XRP is a pre-stablecoin asset. It doesn't really have any utility in this day and age, but he did a great job spending hundreds of millions of dollars fighting the previous SEC, the dicks who are gone now. And in a nutshell, Brad has been calling everybody saying, hey, let's get XRP in the National Reserve. But let me tell you something. XRP does not deserve to be in the National Reserve. Really nothing besides Bitcoin. And that is because of Bitcoin's origin story, right? It's messianic. It's almost like a biblical story of this Satoshi founder who doesn't exist. And as a result, that decentralization makes me comfortable with a nation wanting to accumulate it. I could say Ethereum has gotten to that point, maybe even Solana, but I really wouldn't like to add those assets. There's just too many people that are involved in the origination of these assets and have too much of a vested intent around bringing these to market. So I did think this was funny that Brad is just starting. I'm sure he calls all the time and people are like, Brad, look, we don't want XRP in there. You can literally mint it. This would be like a free press pass, right? There should only be one treasury and it's not his. So moving on, this is also very positive in tandem. The SEC chair, Paul Atkins, says he wants SEC registrants to custody and trade both securities and non-securities under one roof. I have spoken about this time and time again, and these SEC moves, while they may be boring to you, people that came for the tech, people that came for the money, this is what is fundamental this cycle. We have been banging on the drums for the past 4 years to get clarity around these assets. Everything that's going to happen under these bureaucrats is going to be slow, but the signal is resounding that we are moving in the correct direction. If you want to dive deeper into what Chairman Paul Atkins was talking about, I do recommend checking out the SEC's post directly from their lips to your eyeballs. I've shared it in the sources. Do dive in. There is much more meat on this bone. Now, as I continue to move on to the SEC site itself, we get this amazing resource, which we have been dying for. And what is it? An incremental step along the journey. The Division of Trading Markets frequently asked questions relating to crypto asset activities and distributed ledger technologies. This is a fucking FAQ. And this is such a big deal because for the past 4 years, the SEC has just stood there and said, hey, the rules are crystal clear. How can they be crystal clear? The rules are about a financial technology that was built before the age of computers. I shouldn't even call it a technology, a financial system. And we have been wildly unclear. It relies on human intermediaries that they use to enact their regulation, whereas blockchain uses code. We have pre-programmed intermediaries. We have algorithms. We have applications that can automatically execute. Anyone that wants to diligence them can look at the code itself and say, if I give you input X, what does output Y look like? You don't need these intermediaries. And I am sorry that your entire financial regulatory regime has been built on intermediaries that are now worthless. However, this just is the creme de la creme, an FAQ. There are so many questions that people have when they want to build a business in this space, and there's just so much minutia that has been held behind a very opaque and thick veil. With an FAQ, you just have a simple resource, which is what we wanted, to go out there, to build your business, and to do it in a way that is compliant with the things that the country, that the people want to see. This is why I just bitched and moaned throughout the past 4 years that not only was this anti-American, but this was almost like a terrorist act against the country, because as we see, this adoption is going to consume all of finance, all of digital value. This is simply the digitization, and it has to move forward. And if it didn't happen here, it would happen elsewhere. There's no boundaries to restrict this development. Open source code is as simple and fluid as language, and it should be the country that has the freedom of speech protected as the First Amendment that also pushes forth open source technology. We're seeing how powerful it is for AI, and this is what we want to do with the cryptocurrency industry. So fantastic. Love the FAQ. Can't believe how pumped I am about such a simple concept, but for fuck's sake, it's about goddamn time. So huzzah to you, SEC. Big wins and big steps forward. I know they're slow, but they're really, really important. Now, moving on very quickly, I want to point out Alex Thorne, great guy in NYC. If you ever go to PubKey, the bar, you might bump into him. He hosts a great podcast too where he does a little rap, but he is coming from Galaxy Digital, ex-TradFi guy, very Bitcoin maxi, leading a lot of what they've been doing. Galaxy, obviously a publicly traded company now, deeply ingrained in the TradFi cryptocurrency crossover. And Alex points out today that the Senate set for the Genius Act stablecoin vote tonight around 8 p.m. Eastern time. And this is very good, with signals coming that key Democrat Mark Warner said to vote yes and encourage colleagues to do the same. I've seen some posts come out since I put these all together confirming that they are calling for a passing of this bill, basically saying we need these guidelines. We've got to get this out there. I've spoken to you that, yeah, this isn't the best bill for the people. We don't get yield. Banks get to custody our money and take the profits and run away with it. But at the same time, I guess we will take baby steps, right? I would love to see that yield flow back to the holder. That is the core concept of decentralized finance. But if you get stable coins, well, for fuck's sake, you can at least go and put them into DeFi and collect your own DeFi yield. While at the core, that rehypothecation yield or that US Treasury yield will be a consistent cash flow for these banks. And, you know, maybe if we think about it, the banks, if they die a fiery and aggressive death and we pivot too quickly, it could be quite destructive. So maybe this is a nice middle ground. I don't know. I'm coming to terms with it just like everyone else. In one last and sort of tangential point, I actually missed this story, but my buddy Rudy, who CEOs a project called Mass, an excellent DeFi mobile wallet. If you're outside the US and you want to get into DeFi and self-custody, check out Mass. It's awesome. But he pointed out that Microstrategy is, in fact, being sued by a variety of investors. And quite frankly, anytime you're dealing with money and things just aren't like up only, you're going to get sued by some jamokes. However, he says nothing to worry about. Here's what the plaintiffs are accusing them of. And in a nutshell, it's the fact that they've had to adjust their reporting and their accounting as rules change, that some of the gains and the numbers had to be, again, reaccounted for, and that this is very much a nothing burger. So I know people are worried that MicroStrategy is extremely leveraged up. It is, and that is a legitimate concern. But this lawsuit itself pretty sterile and that we shouldn't let it get our panties in a twist. With that being said, I think things are in a very interesting positive momentum cycle. We have a lot of the foundations of building real businesses. We have this aggressive purchase and sort of game chase for the Bitcoin asset itself to sit on balance sheets. And again, people can't make Bitcoin without mining it. They have to buy it from someone else. So the higher this price goes, the harder it's going to get Bitcoin on a balance sheet. The first movers will be heavily rewarded, while the late movers will be shit out of luck, and that is just fine. Now, that being said, don't look at all this bullish momentum and say, I'm going to lever up to the roof, because that can be dangerous. We don't know what volatility will look like. We don't know who the big sellers can be and what they want to do. And of course, between traditional finance markets, between DeFi, there's a lot of ways to lever in both directions. So people actually have the capability, if they have enough money, to move the markets while taking, a hedge bet that doesn't actually impact their own position, but can fuck your day up. All of that is to say the same thing I say every day. Stay safe out there. Good luck, and I will see you tomorrow.